Hello everyone and welcome back. In this video we will take a look at the tattooed chef stock and why it's been falling off a cliff lately. I know a lot of investors and social media influencers have been talking a lot about this stock and it's been extremely popular and I don't really know why, and we're going to analyze the stock. For example, if you've been following my financial education, Jeremy Lefebvre and many more, they've been talking about this stock for many years. And I've never invested in this company because I never liked it and the numbers doesn't have never been looking good. But if you have been losing money in this stock, make this lesson and let's analyze it and why you shouldn't have been investing it in first place. So I did actually a video about this for maybe half a year ago, so around this range, and I also said that I didn't like the stock where it was, and after that, the stock has been falling off a cliff 83%. So that's one of the reasons I saw it coming there, and then the company filed for bankruptcy. I think it was around here, so around 3rd of July. So there are some hints. There are both technical hints and there are fundamental hints, and we're going to take a look at them both. First, we're going to take a look at the technicals and why you shouldn't invest in such companies. So, for example, it started off with great volume and great price action here in the beginning, huge volume spikes on green days. That's something we want to see. A lot of buyers are coming in. But the weeks went on, and around here, the volume was popping off on red days. That's something you don't want to see. A lot of sellers are stepping in, and it came here, it came there, it came on these two, it came here, and then it just went off a cliff. And there are no green big candles, which means there are no institutional buyers. So nobody is buying this stock. So that's one of the reasons why you shouldn't buy the stock where there are no buying power or there are no volume coming in, because that means that nobody is buying the stock. And when there are selling days and huge volume spikes, that means that nobody wants to trade the hands. Nobody wants to take the shares that people are selling. So that means that the price is just falling off a cliff. So that was the technical analysis. Let's take a look at the fundamentals. So, for example, for Q3 2021, we could see that the revenue was growing 43%, 32%, 28%, which is okay. It's not great for such a small company. You want to see a company grow more than that, but it's okay. It's all right. But one of the warning signs is that the revenue growth, the percentage, the growth are declining. So it's 43%, it's 32, a decline, 28, a decline, 14, a decline, and then negative 8%, a decline. So the revenue growth is falling off a cliff, which is not maybe something you notice, because if you take a look at the revenue at the um, the big candles here, you maybe don't assume that the growth is falling that extremely, because this is the fixed numbers. So this is here on Q1 2022 they made 67 million USD, and then 58 million USD and so on, but the percentage was just dropping. And the same goes for the operating income, or let's look at the gross margin. The gross margin was falling too, so it's about 10%, it's about 2%, 6%, 1%, and then -7%, and then -25%, which is just awful. That means that the cost of goods sold is extremely expensive, or they have no pricing power. They can't make up the price for the very expensive ingredients that it takes to make this product. So that is not something you want to see, especially in this market environment. You want to have pricing power in the companies that you invest in. And for example, the operating income or the operating margin is just way worse. It's 28%, it's 40%, it's -65%, which is just awful. That means that the operating, like the expensive the expensive the expenses that it takes to operate the company. For example, it could be salaries for your it could be salaries, it could be rents for apartments, it could be taxes, it could be a lot of stuff that is just operating operating expenses, and that is extremely high too. The operating income is just negative all the time, which is a warning sign, which you could see all the way back to Q3 2021. So the warning signs were there. The and the profit margin here, it was also like -100%, -14, -25, -30. Excuse me. That means that the company is losing a lot of money. And for example, in Q4 2022, the company lost twice as much as the profit they earned, which is just insanely bad. So, and not speaking of the earnings per share, the EPS, they were falling off a cliff too. It was -112, and -117, -150, and so on. They are just losing a lot of money. And here we can see is more visually the revenue growth is just decline, is a steady decline. So let's take a look at the balance sheet. This is also very important. For example, if we take a look at the cash, they started off in Q1 with 185 million USD, which is pretty good in that point of time. It was a lot, but the cash, as you can see, on a steady decline, on a extremely steady decline. This is just scary. They are burning a lot of cash, as we could see in the income statement. For example, profit before tax. Here you can see it's 20 million USD, 26 million USD, 38 million USD, and so on. So it's just awful. And that we can see in the balance sheet, the amount of cash that they are burning. And the cash flow operating is just awful. And these warning signs has been like, even when the company started out, like the cash flow was -15, -18, -7, and the balance sheet, the cash, you could see like Q3 2021. Just this is a warning sign that if it is this steep, which is not something we want to see. And when a company is burning this much, cash, then you want, as a small company, you want to see the small company investing the cash. So you may ask yourself, well, if they're burning a lot of cash, what are they burning it on? And your answer should be, yeah, I hope they are putting cash in like R&D, or investing, or buying more facilities, or vehicles, or whatever. Just invest in something in your company. But that's not the case, because if we take a look at the cash flow investing, That is, for example, in Q2 2022, they invested the cash flow for investing was 7 million USD, which is not a lot. So then you may ask, well, what did they burn so much cash on? Well, it was basically the cost of goods sold. It cost a lot of money for them to make the products. So that's one reason. And then the operating income, we can see the operating income, it obviously was extremely expensive company to run. So that was the reason. Maybe was not a great CEO or something. Yeah, the warning signs are here all over, all over. If we take a look at some ratios, for example, the net debt, that is the net debt divided by total assets. You don't want a positive number, and you can see the trend. It just started off early, which is a extreme warning sign. For example, here when it went for negative 45 to negative 16% in Q4 to Q1, that's like you don't want to be invested in this type of companies, because that means that debt is increasing or the total assets is decreasing, but is decreasing, but that was not the case in this company, because the net debt was rising through the roof. So yeah, there were a few warning signs, and if you look at the video I made back, we also took a look at the products that they were selling, and I was not impressed. I was not impressed at all. The products was expensive, and there was very small portions, etc. So I didn't see the point why I should invest in this company. And I feel bad for all of the people that's been losing money in this company, because it was such a popular stock, and you probably know this company very well. It was circulating all over the internet. So yeah, that's my take on Tattooed Chef. I hope you learned something, and I hope you never make the same mistake again. Take this as a lesson, and see you in the next video. Bye.